You don't vote for them. You don't see their names on ballots. But they decide your house, your job, your data, and sometimes even your politicians. They don't build anything, sell anything, or create anything. They direct the flow of money. And that makes them more powerful than presidents. Because in modern America, money doesn't just talk, it governs. Welcome to WealthLore, where money, power, and history collide. And things are never as simple as they appear. Most people have heard the term hedge fund. Very few actually know what it means. Even the name sounds like something between a legal loophole and a landscaping service. But behind it lies one of the most powerful ideas in modern finance. At its core, a hedge fund is a private investment club for the wealthy. It's a pool of money collected from rich investors, pension funds, and corporations. That pool is managed by a small team with one mission: make the highest profit possible within the limits of the law. While ordinary investment funds must follow strict rules, hedge funds are barely regulated. A mutual fund, the type everyday people buy through banks, must follow the rule book. It can't take extreme risks, and it must publicly reveal its holdings. It's like driving on a marked highway. A hedge fund is the off-road vehicle. No signs, no speed limits. It borrows money to magnify bets, trades complex contracts called derivatives, and can profit even when markets crash. Derivative may sound technical, but it's simple. It's a financial bet on the future. You're not buying the actual thing, oil, a stock, anything. You're betting on what its price will be later. It's like gambling on whether it will rain next week, except you can trade that bet for real money. Hedge funds thrive in this world of speculation, speed, and secrecy. The first hedge fund wasn't dangerous at all. It was founded in 1949 by Alfred Winslow Jones. His goal was simply to reduce risk. His idea was straightforward: buy stocks he thought would rise, and bet against those he thought would fall. How do you make money when a stock drops? By borrowing it. Here's how it works. You borrow a share from a broker. Say it's worth $100. You immediately sell it. If the price drops to $60, you buy it back cheaper, return the share, and keep the $40 difference. But if the price rises to $120, you still must buy it back and take the loss. The technique is legal, common, and risky because your potential loss is unlimited. Jones used this technique only to hedge, to protect himself. It was cautious, clever, academic. But in the following decades, the idea evolved into something entirely different, an industry built on leverage, secrecy, and power. By the 1980s, America had entered an era of financial deregulation. Reagan loosened rules, the Fed crushed inflation, and Wall Street filled with cheap debt. Anyone who could borrow could now amplify their bets. Hedge funds were built for this moment. They weren't banks, so no banking licenses. They weren't public companies, so minimal disclosure. They operated in a gray zone, invisible to regulators, deeply embedded in the financial system. If a normal investor is playing chess, hedge funds are playing poker with other people's money at a table the public doesn't even know exists. In the 1990s, their power exploded. They traded currencies, bonds, stocks, commodities, even entire countries. In 1992, when George Soros's quantum fund bet against the British pound, the Bank of England lost. Soros made $1 billion in a week. One private investor moved a national currency. That isn't a market player. That's an empire. Then came the warning: LTCM, long-term capital management. Founded by Nobel-winning economists, it trusted models so advanced they seemed invincible. According to the math, crises were nearly impossible until one happened. In 1998, Russia's default triggered a chain reaction. LTCM began collapsing, threatening global markets. The Fed organized a private rescue. $3.6 billion. That day, hedge funds learned, if you're big enough, the system will save you. Risk wasn't dangerous anymore. It was negotiable. In the 2000s, hedge funds became trillion-dollar institutions. They hired former officials, donated to both political parties, and lobbied for favorable laws. Their favorite tools: leverage and derivatives, finances, jet fuel, and dynamite. How does leverage work? You have $1 million. You could buy $1 million in stocks, or use it as collateral to borrow $9 million and control $10 million in stocks instead. If prices rise 10%, you gain 100%. If they fall 10%, you lose everything. That's the hedge fund model. High risk, high speed, high reward, using other people's money. In 2008, when the housing bubble burst, hedge fund manager John Paulson saw it coming. But he didn't warn people. He built a product that profited from the collapse. He made $20 billion. Millions lost their homes. The system failed. Hedge funds had their best year ever. After 2008, banks were hit with new rules. Hedge funds, being private, avoided most of them. They filled the vacuum. Lenders, landlords, and political influencers all at once. They took over housing markets, bought homes in bulk at auctions, turned neighborhoods into portfolios. By the 2020s, hedge funds and private equity owned hundreds of thousands of U.S. homes. In some cities, 1 in 5 rental houses was corporate-owned. Now, you don't rent from a person, you rent from a spreadsheet. Software decides your rent, how fast it goes up, and whether you stay. Try finding the real owner. The paperwork runs through 3 states and 2 tax havens. It's not corruption, it's architecture. Hedge funds don't just own assets, they own legal, political, and financial structures designed to extract value from every corner of daily life. They also started behaving like banks, lending to companies, financing acquisitions, even funding distressed governments. This became known as shadow banking. By 2024, the private credit market hit $2 trillion, the size of Italy's economy. During the pandemic, when markets crashed, they made billions. During the recovery, billions more. When inflation hit in 2022, they pivoted into commodities: wheat, oil, metals. They profited from scarcity. The public paid higher prices. Hedge funds don't just bet on the future, they shape it. Their massive positions move markets, influence policy, even affect central bank decisions. Another pillar of their power is influence. Hedge funds are among America's most connected institutions. They donate to both parties, hold private retreats with lawmakers, hire former Treasury officials. This cycle is the revolving door. New laws aren't written to limit power, they're written to stabilize it. Because rules no longer shape the game, players shape the rules. Their real genius isn't exploiting the rules, it's profiting from both order and chaos. Steady gains in calm markets, explosive gains in crisis. They've even financialized disaster itself. There are derivatives on weather, natural disasters, interest rates. Some issue catastrophe bonds. High returns if no disaster occurs. If it does, the money pays damages. You can literally bet on the climate. Hedge funds don't just play markets, they own the data that drives them. Satellite images, thermal readings, credit card flows, algorithms predicting consumer behavior. They've become capitalism's new intelligence agencies. They don't need to control governments, just predict them a few seconds earlier than everyone else. Most of their power is invisible because it's structural. If they own major slices of housing, corporate debt, food supply, or energy, they don't need threats. Their existence is leverage. The irony? You help fund this system. Pension funds and endowments invest in hedge funds for higher returns. Teachers, nurses, workers, Your savings feed the forces driving prices up. Throughout history, concentrated power always accelerates until it breaks. Venetian guilds, the East India Company. Now the new empire is built on leverage and data. Hedge funds are the new trading companies. They don't raise flags, they raise margins. They don't declare wars, they finance both sides. They don't conquer nations, they buy their debt. Real control is quiet while politicians debate ideology. The real power trades between the lines. Hedge funds are now so embedded in the economy that if they vanished tomorrow, markets would freeze, credit would stop, and governments would panic. That's how deep the dependence runs. So when people ask, who runs America? The answer isn't in the White House. It's in the quiet offices of Connecticut, where risk models decide the fate of nations before breakfast. Empires once conquered land. Now they conquer liquidity. We didn't lose democracy to corruption. We traded it away for efficiency. Control no longer asks for permission. History doesn't repeat, but its rhythm stays the same. A new elite rising through debt, data, and desire. And every empire built on leverage eventually learns the same lesson. You can't short the system forever. If this gave you a new perspective, hit subscribe. History holds every answer, and I'll show you where to find them.